Let's stay in the building sector, and facing an uncertain future, building products company Boral has announced a big shake-up of the company. Boral is also planning a capital raising for almost $500 million to help cement its market share in the US, as well as boost its position in Australia. But the organisational restructure will come at a cost, Emma O'Sullivan reports.
Housing market slumps in New South Wales and the US have made it a tough couple of years for Boral. Chief Executive Mark Salway ordered a strategic review of the company 6 months ago, and he's now announced changes to pave the way for a rosier future.
And what it does do is it sets the foundations for the organisation in terms of our future prospects and where we'll be investing as we move forward.
Boral is putting its faith in a rebound of the housing market and has decided to focus on a handful of core businesses, which include cement and construction materials in Australia. To fund its strategy for growth in those businesses, it plans to raise approximately $490 million from shareholders at an issue price of $4.10 a share.
The group has great cash capabilities. We generated $196 million of free cash in the first half of this financial year. But going forward, we see there are tremendous opportunities.
The proceeds of the capital raising will help fund the acquisition of the remaining 50% of Boral's US roof tile business, Monia Life Tile. The deal will cost Boral $75 million US, and while the chief executive says it's a fantastic price, market analyst Alio D'Amato says time will tell if it's a wise move.
The reality is, looking at historic earnings of the business, they're paying around 13 times earnings. So for a loss-making enterprise, that's above the odds. So they're definitely going out on a limb there. They've got a strong opinion as to what they think is happening.
Housing starts in the US at the moment are a fraction of where they've been traditionally. There's no question in my mind or that of the Boral board that this market will come back, and we've been able to pick up Monia at the bottom of the cycle.
Boral also plans to spend a large share of its new funds boosting its market position in Australia.
We're going to invest $200 million in developing our New South Wales quarry capability, and also putting $80 million into a plasterboard plant to expand our facilities in Victoria.
The review has also identified a number of ways to save money. Boral will write off $289 million worth of underperforming or high-cost assets. In the US, this means the 4 brick plants which have been mothballed won't be reopened. There will also be an impact on employees. Boral has 14,500 staff. The restructure will mean about 200 job losses, mostly in Australia.
The cutting down of 7 divisions to 5 also consolidates the business somewhat, and obviously removing some, non-profitable businesses will also contribute over the longer term. Question marks, though, still remain over some of the existing businesses, which is what the market's going to watch with some interest.
Boral is confident the review will help drive earnings growth. It's slightly upgraded its full-year net profit guidance to up to $132 million.